We listen in to the RBI chief speaking on. Let's have a look.
Continuing assessment of macroeconomic situation and financial market conditions, certain additional measures are being announced today. The details of these measures set out in the statement on developmental and regulatory policies, which forms part, which forms part of the monetary policy statement as part B. That will be uploaded, and this will be, as you know, will be uploaded in the RBI website as soon as my statement is over. So a copy of my statement, a copy of the monetary policy committee, that is MPC statement, including the announcements which I am making with regard to additional measures. As usual, they have been uploaded in the RBI website immediately after my statement is over. And let me also say that certain notifications which are also which are as a consequence of the announcements which I have already made and which I am now going to make, they will also be issued either today or in the next few days. The first measure relates to on-tap TLTRO scheme extension of deadline. The scope of the on-tap TLTRO scheme, initially announced on 9th October last year for 5 years, was further extended to stressed sectors identified by the KV Kamath committee in December 2020 and bank lending to NBFCs in February 21. The operating period of the scheme was also extended in phases till September 30th, 2021. Given the nascent and fragile economic recovery, it has now been decided to extend the on-tap TLTRO scheme further by a period of 3 months, that is till December 31st, 2021. The second measure relates to marginal standing facility, that is MSF, extension in period of relaxation. On 27th March last year, banks were allowed to avail of funds under the marginal standing facility, that is MSF, by dipping into the statutory liquidity ratio up to an additional 1% of net demand and time liabilities, that is NDTL, that is cumulatively up to 3% of the NDTL. To provide comfort to banks on their liquidity requirements, including meeting their liquidity coverage ratio requirement, this relaxation, which is currently available till September 30th of this year, is now being extended for a further period of 3 months, that is up to 31st December 2021. This dispensation provides increased access to funds to the extent of rupees 1.62 lakh crore and qualifies as high quality liquidity assets HQLA for calculation of the LCR. The next measure relates to LIBOR transition, review of guidelines especially with reference to export credit on foreign currency and restructuring of derivative contracts. The transition away from London interbank offered rate, that is LIBOR, is a significant event that poses certain challenges for banks and the financial system. In fact, it's not just a challenge for the banking system and the financial system in India, but it's equally a big challenge for the banking and financial sectors across the world, advanced economies, emerging market economies, and every central bank in each of these economies is trying to deal with the problem in its own way. And they have been spelling out their measures. We have also spelled out certain measures in the recent past. The RBI has been engaged with the banks and market bodies to proactively take steps to ensure that the transition is orderly and not disruptive. The Reserve Bank has also issued advisories to ensure a smooth transition for regulated entities and financial markets. In this context, it has been decided to amend the guidelines relating to two aspects, guidelines related to number one, export credit in foreign currency, and number two, restructuring of derivative contracts. Banks will be permitted to extend export credit in foreign currency using any other widely accepted alternative reference rate in the currency concerned. Since the change in reference rate from LIBOR is a force majeure, it's a force majeure event, banks are also being advised that change in reference rate from LIBOR or LIBOR related benchmarks to an alternative reference rate will not be treated as restructuring. The next measure relates to deferral of deadline for achievement of financial parameters under the Resolution Framework 1.0. The resolution plans implemented under the Resolution Framework for COVID-19 related stress announced on 6th August 2020, exactly 1 year ago. They require sector-specific thresholds to be met in respect of certain financial parameters. Of these parameters, the thresholds in respect of 4 parameters relate to operational performance of the borrowing entities. And these 4 parameters are total debt to EBITDA ratio, current ratio, debt service coverage ratio, and average debt service coverage ratio. These ratios are required to be met by 31st March 2022. Now, recognizing the adverse impact of the second wave of COVID-19 and the resultant difficulties on revival of businesses and in meeting the operational parameters, and the difficulty in meeting the operational parameters, it has been decided to defer the target date for meeting the specified thresholds, these specified 4 thresholds which are mainly operational parameters. So it has been decided to defer the target date for meeting the specified thresholds in respect of the above 4 parameters to 1st October 2022. So we are extending it by a 6 months period from 31st March 22 to 1st October 2022. Let me now summarize and conclude. As the COVID second wave ebbs, there is optimism that with adequate pandemic protocols and ramp up in vaccination rate, we should be able to tide over a third wave if it occurs. As a nation, we should continue to be vigilant and ready to proactively deal with any resurgence of the pandemic with more rapidly transmissible mutants of the virus should it happen. The recovery remains uneven across sectors and needs to be supported by all policymakers. The Reserve Bank remains in whatever it takes mode with a readiness to deploy all its policy levers, monetary, prudential and regulatory. In parallel, our focus on preservation of financial stability continues. At this juncture, our overarching priority is that growth impulses are nurtured to ensure a durable recovery along a sustainable growth path with stability. In this endeavor, we have consciously chosen the path of optimism over gloom, inspired by Mahatma Gandhi. And I quote Mahatma Gandhi,